Hello and the warmest welcome to this edition of Captains of Industry. Now, it's a company founded in 1870, actually had to get my facts straight there, and it's arguably the oldest and the largest of global accounting firms. It's evolved, obviously, with all the business cycles of the world, from the Industrial Revolution to the financialization of international markets to the horrors we saw in 2008. Now, the crisis of 2008 arguably shook the world to its very core, but what it's really done is really led us to question what are the values we espouse as a global financial community. These are the questions that KPMG is also having to address as it moves into a new era of business. Moving into new markets like the Asian Pacific, China in particular, expanding its presence in Africa. We're now joined by the Global Chairman of KPMG, Michael Andrew, visiting our shores, explaining to us KPMG's vision in the new world. Thanks so much for being with us here tonight as our Captain of Industry. Now, you're recently appointed Chairman of KPMG internationally. It's a new role. Do you feel like you're in the hot seat?
Oh, very much in the hot seat. I come into the role at a time of a global financial crisis, increased regulatory action across the world, and a great deal of uncertainty. So strong positive leadership is really what's required.
Yeah, and how would you define strong positive leadership for a global accounting firm?
Well, I think it's very important to give clear direction. So I've sort of making the effort in the first 90 days to get around to all of our member firms, talk specifically about what our strategic priorities are, and make sure everyone's aligned and comfortable with our strategic direction.
Back to you a little bit. You've had to move now from Australia to Hong Kong, and I'm sure you've travelled there a million times because of the proximity, but you're based there now. Was it a mental and emotional transition?
I'm still in transition, and I have to say in my first 90 days I've been in Hong Kong for 5, such as the schedule that's demanded. Right. But I deliberately chose Hong Kong because for 3 reasons. One, I wanted KPMG to be different. And the markets for us that are really important are China, India, ASEAN, in other words, the high growth and emerging countries. Right. Secondly, logistics. It really is the middle kingdom. You know, I don't have to change aeroplanes anywhere. 30 minutes out of my office, I'm on an aeroplane with the MTR system over there. And thirdly, my advice was follow the money. So I know that everyone who wants to raise funds has to come through Hong Kong at some stage. So I'm going to see every global CEO or investor that I need to see in Hong Kong.
When you say follow the money, how does Africa come into the picture? Because we do know that KPMG is expanding its presence here. We may not be on the same sort of growth trajectory as Asia, but is it hot, Africa, for you?
Yeah, that's the reason I'm here, essentially. We've been in Africa for a long time and we've been investing progressively, but we really need to ramp it up now because we always see Africa where Asia was, I'd say, 15 years ago. There's basically a huge growth spurt coming in Africa, which we're starting to see in our client base for the investment flows and just when you look at the underlying characteristics that are driving the world economy at the moment.
You've had to field some tough questions early on. KPMG's role in the so-called auditing issues at Olympus in Japan. Don't really want to know the details, but the fact is a global accounting firm in the midst of a redefining of ethics and values. How has that impacted you?
Well, I think you've got to put Olympus aside. Olympus is a fraud situation, and there's always going to be frauds. In the same way Bernie Madoff was a fraud on the US system. and no amount of regulation will actually improve that sort of corporate behaviour. What we need to do, though, as a global organisation, is to stress the importance of ethical behaviour and to work on the basis of principles as the people we actually will deal with. So, for example, in a lot of our emerging markets these days, we are very careful with the sorts of individuals that we'll associate our brand and our name with. We will sort of start to call out really bad behaviours that we see around the world to global regulators, to the marketplace, and make some very bold statements. So we've got a leadership role there to play.
I'm glad you mentioned Bernie Madoff because it just spurs on the next question for me. KPMG also hold over the calls for not having seen some transactions that your clients were involved in and who had invested in the Ponzi scheme that Bernie Madoff had led. There's a sense that you should be preemptive. There's a sense that you should just be looking beyond the trail of money, but you should also be guiding your clients correctly. There's a certain level of confidence building that's required. Can I
do that in 2 parts? First of all, we're not the auditors of Madoff. We audited a small subsidiary in the Channel Islands down there. So I hardly think we're responsible for blowing the whistle on the Madoff because we only saw a very, very small set of transactions. But the issue you raise is more fundamental, which is during the 2008 financial crisis, all of the auditing firms actually performed well. well, then why did the financial crisis happen? Are we actually doing the right job? So I think we've got a role now to play constructively in saying, how can we prevent these things from occurring again? And to me, it's a question of, business model failure, the lack of coordination with prudential supervision, weak corporate governance. So we've got to start to push hard on these agendas. So, for example, we've come up with probably 10 suggestions as to how you can actually improve audit quality, which we're now progressively sharing with regulators around the world and saying, if you do this, then I think you're actually going to prevent the problem from occurring again.
Water quality?
Audit quality.
Okay, audit quality.
It's my accent that you're struggling with.
I thought, okay, KPMG's got a presence in COP17. You're fairly outspoken and forthright. You've also called for synergy in terms of global accounting standards. The way things are done in Asia should be compliant with the way things are done in the United States and Europe. Best practice, what does that mean today?
Well, it means that, in my view, a shareholder, a banker, an analyst, or even a taxpayer should be able to look at the set of financial statements across the world and realise that they've been prepared on the same basis. That's not the case at the moment. We have international accounting standards, then we have the US accounting standards, and then we have a lot of countries who would have their own accounting standards. So what I'm calling for is consistent transparency and application across the world. And what I'm saying is that in doing this, these standards have got to reflect business practices. And as the world changes, a lot of the business practices in the East are different to the West. And it's time that people actually started to understand the best of both and put them together.
How are they so different? Just give us a sense of how you have to navigate different terrain.
A very good example, I think, is that countries like China, for example, the emphasis is on long-term sustainable performance, not beating the next quarter result or the next 6-month result. It's the next 5 years, 10 years. Another example is they look at a broader community of interests. So what are your employees doing? What's the community in which you live or the village in which you live, and what are your obligations to those? They are two good examples, I think, of a difference in philosophy that doesn't necessarily reflect itself in the West.
I mean, obviously you work on a system at KPMG in general of independent member companies. Just give us a sense of how that autonomy impacts on those very values, those synergies you're talking about across the KPMG fraternity, how the things would be done in Africa versus how things would be done in Asia versus how you have to cope with the changing regulatory environment in Europe, for instance.
Well, there's sort of two dimensions to this. The first one is we have a consistent standard and methodology across the world. So we train our people in Africa exactly the same way we train them in Asia, in South America, in Russia. Because particularly when you look at products like audit, you've got to be consistent across the world. But in terms of actually giving advice to investors who are coming to these new markets, you need local autonomy and experience. You need to understand the local culture, the local environment, the local risks to really truly service your global clients. And that's the way we're set up to structure.
Now, your predecessor, who's also been on Captains of Industry,
Sorry,
I must say. Now, his big drive was a new growth path for KPMG as of 2010. You're effectively going to implement that particular agenda. What would that mean? And what would adding your personal, Michael Andrew, element into it entail?
Okay, well, Tim did a great job in setting us in prioritising things like financial services, investing in healthcare, government infrastructure. What I've really done is take a different, added to those, the concept of emerging and high growth markets and the shift in the world that's taking place from the east to the west, and the importance of making sure that you have critical mass and expertise in the new markets of the 21st century. I've also, for example, therefore added China, added resources to our key priorities, recognising that these are sort of the major sort of outbound investment flows that are impacting the global economy at the moment.
You're very bullish about emerging markets in the 10 minutes that I've spoken to you. And I think everybody concurs and subscribes to that view. But when we look at how lopsided this global recovery process is, you've got China powering away, but it can't continue to do so unless there's demand in Europe and the United States. If those economies can't deal with their debt issues, it has broader repercussions for global financial services, for trade. So there's an interdependence that really has put pay to the idea of the decoupling. So emerging markets in the world that we're living in, are they really and truly the drivers of growth and recovery?
Yeah, I think they will, but your point is quite valid. We're already seeing a slowdown in these emerging and developing markets impacted by the deleveraging process that has to take place in Europe and the Americas. But the second trend we're seeing is a different Silk Road being established. Is when you look at the trade flow patterns these days, it's Korea into China. It's China into Myanmar and ASEAN. It's India into Africa. It's China into Africa. So it's also an aspiring middle class of young people who are actually wanting to to own the Western style of goods that for the first time are sort of accessing themselves. So this sort of growth in the domestic spending patterns of the emerging markets, I think, is very much driving our global accounts to invest into these marketplaces.
Right. What do you say to your clients who say, I want to go into Asia, I know I'm going to get good returns, I don't understand the society?
Well, then you won't get good returns. You have to understand the local culture and adapt your product and your style to the local market conditions. And that often means involving a joint venture partner or an agent, someone who has a real expertise in these economies, and scaling up your investment over that period of time. And if you truly understand the markets, then you will do well. You only have to look, for example, at microfinance and the ability of some of the good models that have emerged in Asia, which are now transportable around the world. Each one has to be adapted to the local regulatory environment, the financial conditions, and the capacity to pay in those markets.
Dealing with the Chinese, for instance, people say that economy is state-sponsored capitalism. Every major investment that's been driven has been driven through a state-enhanced financial vehicle, a state bank, a state development agency. And the minute you really open up that economy, things are going to fall apart. When you are working in China, when you are looking at the management of the Chinese economy, what do you see?
I see it a little differently. First of all, I see a series of state-owned enterprises who have been told to go and establish overseas links to diversify the reserves of China and to get expertise, to get brands, and to access resources. I'm now starting to see a private sector, a privately owned enterprise, Chinese entrepreneurs come into the marketplace and again see opportunities overseas and investing there. So we're actually seeing sort of the end of what I call the China state-owned enterprise IPOs and investments. We're now starting to see this being taken up by private sector investments. But there's been a very important change of philosophy in China, which I don't think people have picked up. China has essentially said, we made strategic investments, long-term investments in the early 2000s and in 2008. We're now a financial investor. We worked hard to achieve these reserves for the Chinese people. We now need to make sure that we get a financial return. So don't just expect us to flood and rescue Europe under these circumstances. Yeah. We will play our role, but we want a return for that investment.
Okay, we're going to continue on this tack, perspectives of the global state of the economy at the moment, especially as we're seeing Europe as it's looking for new financiers, calling on China possibly to tap into their over $2 trillion worth of reserves to come in with support for bailout packages. It's the views of Michael Andrew, the newly appointed Global Chair of KPMG, an illustrious career in accountancy and finance, and now spreading his wings beyond the Asian Pacific region. We're going to get his views after this step.